Hello everyone, welcome back to another video on backtesting and chart work. Today I want to focus on US indices specifically. As a promise, I will periodically pump out these backtesting and chart work sessions, and I want to do them on different market, different time frame, and different pairs. This is for me to present the importance of backtesting. Remember, I've done several backtesting videos on why we do them and how we do them. Not only it will help traders to eliminate, negative emotion like fear of missing out or fear of losing. It will also give trader confidence and confluence to identifying trade opportunities and execute them. Most importantly, execute them when the time comes. So specific today, let's go into the main ones: the NASDAQ 100, S&P 500, and Dow Jones. Okay, so let's start with NASDAQ here. I want to talk about all the kind of the market crash that we have seen in the past and identifying that was there any possible entries, was there signs or signals, so to speak, was there any indication from the price action from a technical perspective that we were going to get that bearish drop. So let's start here with NASDAQ 100 here. So we know that coronavirus happened during February or March. We know that this move happened because of the market crash. So let's dig into a little bit deeper. Seeing the lower time frame, was there any clues? So we know that there was this ascending channel correction, right? We understand ascending channel are reversal structure in nature. We have a very high probability that we will get that bearish reversal when a correction completes. So the higher time frame, the larger, the bigger, the deeper the correction goes, the higher the probability that the reversal will happen. So when we look at this structure here, you can see that there was previous kind of ascending channel structure and they didn't end up breaking out. It's important to understand that when a correction isn't finished, it can just drag down forever or for indefinitely, and you can never call the top because we are not 100% sure when a correction will finish. But we should have a very good understanding of it when we see a potential entry, when we see a potential developing, that you see the larger, higher time frame ascending channel, but there was many smaller, lower time frame ascending channel to give you that confidence that you're looking for. So let's look at this latest bit of the structure here, this latest bit of ascending channel. We know that there's ascending channel formation, and the difference here, in my opinion, compared to these previous one is when this ascending channel completes, it actually forms a little bit more indication that there was a continuation correction. See, the difference here is there is a bearish push down on the lower time frame. There is actually a lower time frame continuation, right? At least two swing highs and two swing lows to continue the price. So that to me is the first indication that this move can likely to break out, right? To continue to happen. But to clarify, it's always waiting for this higher time frame structure to complete. So what does it mean when we say complete? Well, we want to see a few things, right? Two major things is first, we want to see a complete breakout from the ascending channel. So let's see if we have that, right? We have that ascending channel breakout, and then the second thing we want to look for is key is there a lower time frame continuation correction, right? It's the same thing as when we see this lower time frame continuation. Once we have a bearish breakout from this ascending channel, was there lower time frame continuation? In this case, there is a small lower time frame continuation. This is one of the entries I always talk about, a correction after breakout, right? Because we know that the higher time frame is likely to resume its bearish price action, the bearish impulsive phase, and on the lower time frame, it needs to correct itself before the next downside, right? So in this case, this is kind of what price did. We see that lower time frame continuation, and price eventually to pop downside. And remember, we talk about backtesting, right? Remember, we talk about how to backtest so that it works for you in your trading journey and your trading plan. We know the tendency of the price is when it reaches to the beginning of the correction, this is an ascending channel, when the price reaches the beginning phrase or beginning start of that correction, likely price is going to bounce off, either forming a double bottom or a pullback, a deeper pullback, whatever it is. We usually see a potential rejection here. So this to me would be a first scenario to kind of take profit from your trade here, and then looking to see if the price can further break below this position. So naturally, when you backtest, this is what you do, right? You put in your chart work, you put in your long and short positions, you kind of measure yourself how you would able to capitalize on this position if you're looking for a sell like this, about 3.5 or so, and then looking to exit your trade, and then understanding that there could be a deeper pullback happening or just a straight out reversal, and you don't want to lose all the profit that you just made. Okay, so going on, let's keep playing the replay button. So if this was the beginning, kind of a take profit area, see what price does. Well, it kind of pulled back a little bit. It pulled back to quite fiercely, and then it forms what? Let's take a look here. It actually forms an M style pattern that we talk about as a potential reversal, right? We see price pop to the upside, pushes down, and then form another small ascending channel, M style pattern. Usually we see M style pattern at the top of the structure for a reversal, but in this case, you can see this is a bearish impulse. This just becomes a continuation phrase, right? A continuation phrase, even though M style patterns are reversal. Well, what is actually reversing is this bullish pullback of the reversal, and you have an M style pattern and you continue downwards. And this is what happened when we just keep playing the replay button. We see how far the price continue downwards, and that is becoming a potential reversal kind of point. When you look back at this, when you understand that M style pattern, yes, they are supposed to be reversal at the top, but they can also be a continuation phrase for this previous move. It's still reversing this bullish push, nevertheless, right? It's still reversing and still going down afterwards. Okay, so that is the first example I will talk about, right? Looking for a potential entry, looking for a potential entry and setting a target as the first initial target, and then looking at the price to see if there's further downside. Okay, so let's move on to other indices. Let's move on to Dow Jones here. So Dow Jones here, when we zoom out, well, let's just look at the time when we have this market crash during coronavirus. So same idea here. Let's do the replay. Let's do back testing to see what we get. So if we look at this last bit of the price here, what do we see? Again, we're seeing similar ascending channel structure, right? Price is within this corrective structure. It's just correcting. And see this latest bit of the price. What do we see here? Well, right away I see a potential reason double top and then a potential M style pattern as well. And this part of the price is rather corrective. It's not in a bullish kind of price action. So let's see what will happen here. And look at what happens here, right? If you look closely here, we zoom in a little bit. What do we see here? To me, this is a head and shoulder pattern. It's not perfect. It's not textbook as what we would usually learn or see. But what it's telling you is there's a push to the upside, pull back, and another push to the upside, but it does not continue higher. Instead, we push down and form a right shoulder ascending channel, continuation correction, and we push out of the price. This is kind of what we see here. So again, it's not going to be perfect, but remember when I talk about price action structures and patterns, we want to pair as many price actions and structure as possible. So what do we have here when we do our back testing? Well, reason double top, M style pattern, head and shoulder pattern, larger head, higher time frame ascending channel. So you have multiples of different confluence adding to your favor. You understand multi-time frame analysis. We know that top-down approach, what you see on the higher time frame, you dig into the lower time frame to see if there was possible entries or possible confluence to enter a potential sell. So when we break out here, as always, let's look into it. We broke out this higher time frame structure, great. That's the first sign of continuation, but is there continuation on the lower time frame? So if you look closely here, when we zoom in, there is a clear continuation correction once again, right? A pennant or triangle, whatever you want to call, but it is a bearish push out from the higher time frame structure and a lower time frame continuation. Okay, sometimes the lower time frame, they may or may not be the size that you think they will be. Remember, we will never know when a correction will finish. What we do know, the most tendency is that you need to have a few swing highs and few swing lows, at least two, and then it can vary in sizes and varies in form, right? But you see all these previous price action, all these previous ones I just mentioned, add so much confluence for that potential sell, for that potential bearish move, that once you break out of this higher time frame structure, there's bound to be lower time frame continuation correction to push the price lower. And as always, we talk about backtesting. Remember, I talk about see what the price will do at this low first is always going to be ideal, right? So let's see what price does here. You can see that we just impulsively break to the downside, right? Very strong push. It's a pretty much a sell-off in that sense. price continue to the drop. There really isn't any more correction here. You can see that potentially there was a correction here, but ultimately this is more a clear correction rather than this is just a straight up drop. There is really no entry here in my opinion, and this was the only entry when I see a breakout out of that higher time frame structure. So be patient, but also understand that when you backtest, when you do chart work, so the next time you see this move happen, when you see this lower time frame continuation on the live market condition, you will execute accordingly. Okay, so let's see what happened price when they reach this low area. We're just gonna keep playing it, and then you can see that again. It's similar like NASDAQ. What happens is when price break this previous low, it had a sharp pullback, right? It has a sharp pullback, and then it still formed an M style pattern just like NASDAQ. Just like NASDAQ here, where we formed an M style pattern kind of reversal. So we push back up, pull down, ascending channel, and then push down once more. So ascending channel on the right part of this M, but this M style pattern nevertheless still brings down the price at the end. So again, knowing when to set a target, when to set a potential take profit area, you set your entry order, something like this, when you see that order, and then you look for a potential entry to the lows of the correction, right? 3.9 to 1 or 4. I think that's pretty decent, and then look to see if you have continuation to the downside more. Okay, so that is Dow Jones. So last thing I want to touch on is S&P 500. So very similarly, let's do back testing. We go back to before the market drop, and this is that same thing, coronavirus time, right? Again, you're seeing the same ascending channel, right? Because you have to understand, most of these indices, they're going to move the same way. I'm going to just give you a few examples right now. Is if you zoom out, right? Remember, we don't want to zoom in too much when we do these things. When you zoom out here, when you see these ascending channels, you're always likely to see that bearish drop. It's the same thing, right? It happens all the time, right? It doesn't matter what time frame, especially when you zoom out here on a higher time frame, you notice that when these indices pushes up to that continuation up, but it's in a corrective price action rather than an impulsive, we usually going to see that reversal, right? This is during the 2008 market crash, and then when we zoom in here, this is during the 2018, and this is during 2020 during the coronavirus. So what is the difference here, guys? If you look at what we have here right now, there is no difference in my opinion. We are still in this ascending channel correction. It's the same here. We don't know when these will finish. You can tell they continue to move up, but eventually you get that bearish move. It's the same idea when price was in this area. We didn't see all this price action, of course. We were just right here. And when it was ready, when the time comes, we still see that bearish continuation, the bearish momentum to the downside. So in my opinion, really is no difference here. Unless we see a strong breakout to the upside and a continuation like this, then yeah, I will change my bias on this. But when you look back at previous price action, when you see the similar structure, the similar price action, you understand that there is a likelihood of this bearish move to happen. It's not ready, right? We want to wait for confirmation. We want to wait for lower time frame breakout, lower time frame continuation. That's kind of always what I talk about. So this last example here, let's look at Dow Jones, S&P 500, sorry, and we look at this ascending channel once again. So ascending channel correctly pushing the price up, very normal as what we see in the last two indices that we just gone over. So let's see if there's any clues here. Well, let's see here. Is there any clues here? It looks like there's a small ascending channel pushing it up. There's a potential reason double top as well. And let's see. So you can see once this ascending channel completes, we have that bearish breakout, right? And if we look deeper into here, it's a little bit similar like NASDAQ when we started, right? Is there a continuation here? It clearly shows a continuation here after this bearish move to the downside. So that is the first clue or first potential entry if that fits your trading plan and your risk management. But ultimately for me is waiting for a potential breakout, right? A potential bearish breakout from this higher time frame ascending channel, and in the lower time frame, was there any kind of clues here? See, same kind of correction, same kind of small, quick kind of pendant correction. We break out of this ascending channel impulsively, and lower time frame, there is a continuation correction. So again, doing backtesting, where should we set our target, right? Let's see, does the price eventually reach all the way to the low here? And it does, right? You see that price actually managed to bearishly impulse all the way down to the low, just barely touch the low before it start pulling back here, just like the NASDAQ, just like Dow Jones as well. So again, back testing, right? When we look at these, when we potentially look for an entry in the future, same idea. Look for a sell stop entry. Look for the beginning of that correction as a potential run, and about 5.8 to 1. Right? So this is kind of how I would backtest, right? Knowing that this bearish move has happened, that we dig back into the price, we look at lower time frame, we look at was there any clues, was there any signs, was there anything telling you that the bearish move is potentially happening? And to me, there is, right? Whether we execute them at the time is relevant, is about now, today, you're doing backtesting, you understand these happen. So when you go to the most current price, when you go to the current price action that we're in right now, are we going to be able to execute them when the time comes? Because you have seen them play out in the time before. So can we be patient and wait for that confirmation, breakout, confirmation, correction, and look for that confirmation sell down to the lows? Right? It's exactly the same thing as what you hear. And that's why backtesting, doing chart work is super important on different markets, different pairs, different time frames, because you're going to see the same move that's going to happen, and you know how to able to capitalize on it when the time comes. Okay, so I will link a few videos below here on backtesting and other chart work that I have done, and hopefully that will help on this video as well. So any question, guys, any feedback or comment, please let me know below, and I will chat with you guys next time. All right, thank you very much.